Okay, good morning, traders, and welcome to this live intraday strategy webinar. Today is Thursday, February 18th. Mike Boutros with you on the horn. Great to be with you guys this morning. Interesting moves to end out the week here. So we'll hit DXY, Euro, Aussie right below resistance, dollar CAD right above support, dollar yen into big resistance, sterling into big resistance, gold into big support. Lots to look at on these fronts. So uh, as always, any questions, Aussie CAD weekly and daily, please. I got you, Ted. Aussie CAD weekly and daily. Awesome. As always, questions, trade setups, feel free to throw them on the message board, and let's just jump right through. So here's what DXY looked like earlier in the week. We had just come off of upslope support. This is the 4-hour chart. And confluence support with the 618 retracement of the yearly range thus far. So that gave you 90.23. We're looking for support there. Key resistance and bearish inval, what would mark resumption of the broader advance, was right at 91, 91.03 to be exact, as 618. We've now ripped right into that and pulled back. So again, just real quick, from the weekly chart, from the weekly standpoint, there's really nothing. We've been highlighting this key range since essentially the start of the year. It's 89.93, the objective yearly open, and the 91 handle, which is just the 2017 low. Both of those converge on slope. And you can see, aside from that February open, we peaked just there, didn't quite make it. And this is the range that's going to influence the dollar index moving forward. All right, so we're still looking for a weekly clearance of this range to really validate the next leg in price, right? Everything in between is kind of noise here. But on this pullback, the focus is monthly open support. Just below that, you got the 618 of this week's range that gives you 90.47 to 90.53. This is where I really want to find support. I don't want anything lower than this if price is heading higher. Again, here's what it looks like on the 120-minute, 2-hour chart. And again, compared to what we look like earlier in the week. Okay, so nice rip, nice reversal. Looking for support here today if the uptrend, if the turn is legit. So no, data of consequence on heading into Friday. You do get market manufacturing PMI numbers expected to come in a little bit softer at 58.5 versus the 59.2 previous. Not expecting it to be a major market mover, but certainly for the index, we need support right here into 90.50s if the turn is legit. So not much to write home about there. Even if we were to fill the gap, right, that you see here on this chart, the close is 90.50 right in here. So even if we're going to drop into the low day close, that's in the same zone right between the 618 and the February open here. So watch this today. A topside breach above 91. The first level you're looking for is 91.30s, the 38.2, but you're essentially looking for the recovery to fresh highs in that case. All dependent on what we do near 90.50 today. So that's DXY. Euro, similarly, is not really that exciting. I would have loved for this to be a little bit better of a play. Here's what it looks like, or here's what it looked like earlier in the week. We had talked about the outside reversal that we made right off the lows. That shifted the focus higher with the break of that near-term channel, right? But we never quite made it into the 618. We talked about this on Monday. We posted an outside day reversal, or excuse me, on the Tuesday webinar. Posted an outside day reversal that day. Here's the drop into the 618 and the bounce. Again, it's the exact inflection, exact opposite mirror of DXY. If this is legit, the turn that we saw here was legit, rallies should be governed by the monthly open, by the weekly open, by 121.25, this zone here. So looking for exhaustion on this euro recovery, just like we're looking for exhaustion on the dollar decline. And the levels remain unchanged. Really, nothing changes from the setup we were looking at earlier in the week. It's been kind of messy. We broke down here, saw the January low, saw the 618, That was the move we were looking for early in the week. Here's the recovery. We're basically looking for exhaustion ahead of 21.25. Interestingly enough, I don't want to get too granular on this chart, but if we tack on a quick retracement, the 618 comes just ahead at 2113, 2115. So you're basically looking at this 10 pips zone, which would be sort of the sweet spot. Okay, for any kind of topside exhaustion on this immediate move here. That zone right there. Okay, now ideally we get some slope. So I was looking at this earlier today. You can take this sort of this tact. I'm just going to delete this for just to show you guys. If that does end up being the confirmed sort of swing high, you can see a pretty decent slope emerging here. You got resistance, 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 break, acceleration, decent pivot here along the 25%, 75% line rather. I don't want to put too much stock on that, but you can see where the lower parallels would start to converge on pretty major regions, all determinant on failure today ahead of monthly, weekly open resistance. Questions on euro? So of the stuff we're carrying or covering today, those are actually the messiest. I think everything else is much more clear. Now Aussie is kind of ranging. You haven't really seen the strike in Aussie and some of the other crosses just below resistance. Again, here's what Aussie looked like back on the 16th. We had just tagged the bottom end of the 78, 78, 36 region. Absolutely paramount. I'll take you back to the daily charts. Hell, I'll take you to the Aussie weekly charts. You know, we've been talking about this range for forever. Here's the 88.6. It'll decline all the way from the 2018 high. Here's the objective 2018 yearly open. Major pivot in price. If you go back even further, the high strike that you made back here in 2060, it's all loaded in this zone. So we're still holding sort of this support trigger and momentum, still holding below 70. Momentum still, or price rather, still holding below resistance. You know, it's all about inflection off this region above 78.36. Again, my humble opinion, there's really nothing until you get into the 80s, 81.25. Again, this is the daily chart, but just to keep in consideration, this is a major pivot. Excuse me. So that's the weekly chart. Here's the daily chart. Same zone. Here's your weekly open. We can ditch this slope and this slope at this point. Same key levels on the upside. 79.16 is a soft target if we break through, which is a former swing high from March of 2018. But the long side is at risk while below here, you know? So the intraday chart, unfortunately, hasn't given us much by the way of triggers, by the way of actionable trades. You know, you could have taken a short earlier in the week when we talked about this as soon as that hit, but we haven't even hit the initial sort of level of support. The 236 was 77.50s. You know, I think I had that on there for you, 77.50s right here. So we did hit that, drove a little deeper to get that 25% parallel, but we never got a 38.2. All things held constant, you're still in the weekly opening range. It's just a range below resistance, but still within the confines of the uptrend. So I'm really looking for some clarity here with a break of this range. Ultimately, the long side remains vulnerable below the 78 handle. So if the dollar is going to mount any type of meaningful recovery, generally speaking, on its own merits, Aussie should be seeing some pressure here while below 78. Questions on Aussie dollar? No data from that front till next week, deep next week. All right, so Ted, I'm gonna hit CAD real quick, and then we'll jump into Aussie CAD, right? So we know where Aussie is, just below resistance. Here's what dollar CAD looked like earlier in the week as well. This thing has been pitch perfect, I think. You know, as far as where we're trading on this decline, dollar CAD looks like this right now. We came right into the upper parallel. The region highlighted that lateral level was 27.13. We made it just higher, tried to break through the upper parallel, failed. This pullback, this might be already on the works, but what I was looking for is failure ahead of 26.62. We might be getting that here. Here's a 30-minute. But the point being, this is the 618 of the weekly range. If this is going to hold here, the topside breach again would have the same levels in view, guys. The only thing we've added here is just the 618 for this near-term weekly range. So I want to see a reaction here. Break above 27.13. You're looking for that March trend line. So here's what it looks like on the daily chart. Well, let me take you one step back. Here's dollar CAD on the weekly, right? Do you see this level, guys? We've been talking about it for months. 2018 open, 786 of the 2017 rally, slope support, 1 touch, 2 touch, 3 touch, we're there. So the whole premise of the dollar CAD trade lately for us has been downside exhaustion. Look for the bounce, downside exhaustion, look for the bounce, right? So we got the initial bounce. That bounce failed at the low week close, is pulling back, and that pullback is exactly what we're trying to gauge. Here's dollar CAD on the daily, right? All things held constant, you're still trading within the January opening range. So this thing is a range-bound trade above critical support. Those tend to be typically good trades. We highlighted the fact that on Tuesday we saw that outside day reversal off the lows take us higher. That failed and pulled back. Again, that pullback needs to find some support essentially here. Okay, essentially here in 2660s, maybe the lows from last week, you know, it'll drive down lower, but essentially we're looking for this to sort of peter out here. And again, a breach above that upper parallel starts to put in focus a larger rally here in dollar CAD. So with that in mind, right, they're both largely, Ted, ranging trades, except dollar CAD is trading at big support and Aussie is trading at big resistance. So the move corollary on those should be a break in one direction or the other if we do finally see this start to rip. Here's what Aussie CAD looks like. So let me take it, you want it on the weekly and daily. Let me take you top-down approach. Here's Aussie CAD on the weekly. Something to consider here, just above that 786. So if you take into account like the 2012 low, pivot, that puts you at 99, well, basically 99 to 99.20 on the weekly chart as like serious critical resistance here. Okay, let's look in the daily chart. Same level. Looks like we mapped that out earlier. Monthly, yearly highs, all at 99. Yeah, Ted, broadly speaking, man, this is a low conviction trade. I think something will be up here, but looking at the individual performances of the two, looking at price action to date, this is not something I'm super excited about. I mean, here's your yearly open. Again, you've went to a low, went to a high, made a new low. We're testing near the highs again. Pistol to my head, I would still be looking for topside exhaustion around this area, but that's going to be determinant and predicated on Aussie weakness outpacing dollar CAD weakness. So that means Aussie dollar lower sharply, more deeper than dollar CAD higher. Maybe that's the case. All I do know is that we should definitely, Ted, be focused on inflection here, meaning if you do get a topside rupture above 99.15, especially on a closed basis, watch out. There's really nothing to keep it from ripping. This is a pretty big level up here. It's a pretty big level up here. So inflection, my ideal scenario, again, I'd love to see Aussie outpace the weakness here, just on the near-term front, but I don't think you have necessarily a setup per se. One thing I would say just objectively, right, Ted, take a step back. We're just looking at price action naked. Here's your weekly open, right? If this is a weekly opening range break here today, downside should be limited to the slope, and you're looking basically for that stretch towards 99. So here's your weekly opening range high, break, test the weekly opening range high, support, and move on. That would be sort of the tell we're looking for into the US trade open today. Ted, does that make sense? He says, okay, very helpful. Right on, right on. And just obviously this retracement, Ted, just don't forget that's based or was based on what we looked at earlier in the week. So we're going to want to adjust that to the new high, whatever that high ends up being. Again, I don't know that this is anything, but just keep that in mind if you do mess with this one. All right, so that's Aussie CAD. 3, 4, 5, and number 6. All right. Dollar yen. Okay, thanks. More than welcome, Ted. Here's dollar yen. Huge move, guys. I'm so impressed by dollar yen, and I've continued to tell you this. It's not something I get super excited about, except this has just been phenomenal. If you go to the previous update, guys, which is always provided for you, on the 9th, we talked about this big support zone. It was a 38.2. It was 104.50s. We said ideal scenario, 104.40s, 10 pips, another 20 pips to get into that lower parallel. But largely speaking, we were looking for support. Bearish invalidation of 105.13. We got this dribble here for a while, broke through 105.13, and ripped into key resistance. I mean, this thing was super duper clean. Here's what it looks like, or here's what it looked like last night. So we had ripped into this resistance zone. You saw divergence, price action making a higher high on a closed basis, the oscillator making a lower high into that upper parallel, into that fib confluence, into the 2019 low day close, 106.09 into 106.25. We petered out right in there. Here's the pullback. Now, if you're holding shorts on this, I wouldn't get too aggressive. Let me take a step back and show you what the whole justification was. Here again is a 38.2 retracement of the entire decline off of the March highs from last year. Here you have the October range swing high, the May close low, the 100 and the 1618, excuse me, extension of the advance, and channel resistance. All right here. Beautiful place to find some resistance. Daily chart divergence. Price action with a higher high, the oscillator with a lower high. Again, these reference points being so close to 70 aren't typically a strong signal, but a signal nonetheless, right? So on the back of this, 5-day spill to the upside, it's expected to get this pullback here. It's really, really nice area, perfect zone to find some resistance. How deep that pullback gets is kind of what I'm trying to assume now. Here's just a really quick, I'm sorry, going backwards, dollar yen in the weekly. Again, same level of reference. This is a pitchfork off the low, high, low. Median line resistance is right there. On the daily chart, we're looking at the basic channel, still giving us that same spot. And just a very compelling case to find some sort of near-term hold, some sort of resistance, and we're getting it. Now, the decline isn't really gathering pace. It's kind of just not really the cleanest thing. And one other thing I would want to just highlight for you here is a quick retracement of just this month range. So something like this. Look where this, look where the 618, not this, comes in, right there. Hell, there's a 38.2 on there too. So the 38.2 gives you 105.50. Great, cool, something to do. If you get to 105.30, take some 105.50, take some off the short, bring your stops down to break even or better. Median line is just lower, but this is the big kahuna. 618 of the rally. This is the longer dated 100 off the low that we were following. It was a really nice pivot at 105.13. That gives you 105.13, 105.10 as key support for dollar yen. Now, bullish inval, what should suggest dollar yen's done, the recovery's done, we're looking lower. It'd have to be a move below the monthly open. That's 104.77. So that's where I'm at with dollar yen. It's just been a phenomenal. It's been so clean. It's almost too clean for comfort. But again, it's a very similar scenario to what we saw here, right? We're coming off of upslope resistance. Here we have upslope and lateral resistance. Certainly the focus near term is for a little bit of a spill lower off this level. Questions on the abomination? Not so abominatory lately. Coming off big resistance here. So next one is sterling. I'll be putting out a piece on Daily FX later today on this. But I just wanted to show you where this thing is at after our update last night. So we highlighted that this was big resistance, and it is on every time front or time frame rather, guys. You look at here's sterling on the weekly charts. 618 extension from the advance off the lows. 1, 2, 3. 2018 high week reversal close. Okay, that gives you 139.97, basically 140. We're there now. We're there now on the back of a 1, 2, 3, 4, 5, 6 week advance. We had one down week this whole year in sterling. And as we said at 37.43, and we talked about that level for months, if this level breaks out, this shouldn't be a little meander. It should be an accelerated rip. Well, we've gotten that accelerated rip, but this is the first hurdle. So yeah, I mean, I'm not necessarily saying we should be shorting sterling. And I even told you in last night's update, despite the dollar recovery, sterling has been very resilient. It's still the top performer versus the dollar this week. So that's the tell that we look for. You know, when broader dollar consensus seems to be moving in one direction across the majors, you see that one lonely guy kind of holding higher. Sterling is that warrior, as it were, right? So I'm surprised to see this quite this high again, but here we are still in resistance. Nothing changes. We need to close above 39.95 to mark continuation. 40.40 is just a soft target in that regard, guys. If this breaks, it's not only a breach of lateral resistance, it's a breach of uptrend resistance. And what do we always say? A breach of uptrend resistance can oftentimes be the sharpest part of the rally. So we know we've been talking about sterling just being unrelentless and just ripping. There's a lot more to come if we clear this. I don't know if we do or not. I'm looking still for a possibility of exhaustion, maybe a third reference point of divergence, something. But at the end of the day, northbound of 140 on a closed basis, and you know, you're playing with fire. You don't want to try to fight that. Questions on sterling? So you do get employment numbers for the month of November. Is that a right typo? On February 23rd. That might be a typo for the month, but we do get a print for employment then. Till then, continue to watch this major resistance zone. Huge, absolutely huge. Okay, that's number 8. Number 9, gold. Huge level as well. All of these trades, guys, have pushed trend extremes into the close of the week, or midweek rather, and then pulled back. For gold, it's crystal clear. 1767, 1763. We talked about this zone on the initial decline that we were looking at in November. That decline drove right into that. 1764 was the low, okay, and rebounded into the close of the year. It's been a one-way track back and forth, right, but still holding this really nice basic channel resistance. Here we are again, confluence support at the November lows, the 50% retracement of last year's range, and the 618 extension of the decline from last year's high. It's all here. Just to sprinkle, right, some sprinkles on top of that. the slope we've been following from the 2018 lows. Parallel, nice inflection. Parallel, nice inflection. That's right there too. In case that wasn't enough, the broader pitchfork we were following for all of those years from the 2013, 2016 lows, yeah, the upper parallel, which when ruptured gave us this huge rip, that's here too as support, former parallel resistance. This is loaded 6 ways from Sunday. It's huge. So we got to find inflection down at these levels for clarity on the next move here in gold. So intraday starts to look a little messy. Here's what it looks like. So there's 1764. Remember, it extends in 1763 also on the weekly charts. This was a pivot zone that we were watching for a while. I'm willing to forego this. This is the 2012 high, the 100% extension. So I'm going to go ahead and drop that, clean this up a bit. Here's that 50% retrace of last year's range. This 38.2 gets dropped to the new low, new bearish inval. Key support, still 1763. Into 1767. Let me throw that extension on there too. All right, just so for consistency there. So this is huge. We didn't quite ground into it. What was the low? The low registered at 1769. Here's the first rebound and test of resistance. Again, that former 2012 high, 1790. Look for something here. At the end of the day, that 5-day decline took you into a major level. And while we turned just ahead of it, here's what the intraday chart looks like. You can envision a scenario here. This is the 4-hour. Let me show you the 2-hour, where maybe get in recovery towards 1803, but we still drive down to the 1763 level for a final test of those lows from November. That's what I'm thinking. You know, just looking at this objectively, at the end of the day, if you're not already short, trying to take a new short here for a target, you know, at 1763 would be hard pressed. Maybe if we got a little bit of a drive higher, failure closer to 18 might be worth it. But just know that the entire decline, guys, this was like the level that we were looking for all of those, the whole monthly decline. So I just don't want anyone to get too excited about pressing this short. If 1763 gives out, there's room. 1740 is like the first level you look for before you run into slope. But for me, it's going to kind of be what happens in this zone. Bearish invalidation, I still leave at 1825. That's the weekly opens, the upper parallel. Ideal scenario, if we are going to make a strike in this region, we look for resistance here. Okay. As far as trying to take the long, none of you have asked this yet, but I kind of sense it coming for gold. Look, it's either a drive and a really stronger rebound off of this, or the break above the weekly open. I don't really want to get caught flat-footed on gold. If the dollar breakout materializes and does give us that thrust, this probably has a pretty expedient drop, and I just don't want to be sitting in that. So it will be time, I think, soon to get back in the gold trade and look for a larger, more substantiated low. We just don't have that conviction yet. It's just not there from a technical standpoint. All right. And that's gold. And I just had here a note. I mean, I'm not really involved in this. Here's Kiwi. You know, I just wanted to give you guys a quick update from the last Kiwi trade we went over, which was the 10th. Here's what it looks like. Man, it just hasn't done jack. Okay, this is the 72.68 level, which is the 786 retracement of the drop from the highs. We kissed it early in the week. Okay, right here, we ripped right into it and then just took out the weekly open, and we turned ahead of the February low. Now we're essentially almost unchanged on the week, trading right in the middle of the weekly range. It's like set your nightmare scenario when you're looking for clarity on directional bias. So I don't have anything on Kiwi, but I do want to just highlight that it's very similar scenario that we're looking at with Aussie. I think Aussie's got the call in the bigger resistance zone here. But for Kiwi, it's range, range, range. End of conversation. Until we clear this godforsaken range, um, I just don't really want to be involved in this. Now we could see this continue to consolidate, continue to give us a little bit more of a crunch in the days ahead, but just a low conviction trade here. Just wanted to highlight that we haven't really done anything in Kiwi yet either. Okay, last thing, I just wanted to show you guys a trade or the chart of Bitcoin, because everyone seems to be like, oh, Bitcoin's doing no rhyme or reason. I disagree. It's not been that messy, actually. You got a little bit of a latency, a hesitancy heading into the 50,000 mark. Obviously, we had 49,820. That was actually more accurate than 50, just for argument's sake. But you can see how many tests of resistance. There's the break. All things held constant, you are constructive above 49.65. Next level up to the upside is like 56,000. So my point being is, if this thing fails and marks a daily close below 49.8, I think you're on the onset there for a larger pullback. But as long as this holds here, you're still in overbought condition on a daily chart. This could stay another 6 months here, right? So just some food for thought there for some water cooler talk as you get into the offices and talk about what's going on in Bitcoin. All right, guys, that's all I've got. We're going to wrap it up here. If there are no any other questions, if you do have them, drop them on the message board. Some quick housekeeping. Next week and the following week, I will be doing a 2-part mini-series for IG. It's going to be hosted on Daily FX, but it's going to be an IG joint webinar. An IG guy will come in for a platform walkthrough after my market analysis, but that's going to be at 9 o'clock. It might be 9:30, but don't quote me on that. Here's the link. So here's the link, market checkup. So it's just going to be sort of, let me just drop that link for you guys in the box here. It's just going to be a supplement to the Monday webinar, okay, that I do on Daily FX. And obviously we do everything here in SB, but this will be a good update just for you guys as well. So we'll kind of give you an update on where the trades have gone, 45 minutes, maybe 40, and then someone from IG will come on and do their little spiel. But I definitely want to encourage you guys there. For SB's purposes, I'll have one webinar next week and one webinar the following week before we go back to the normal schedule. But you guys will see me 3 times next week: Monday, Wednesday, and then right here on SB. So I'll keep you updated on the homepage with that schedule, and I hope to see you guys there. And if there are no other questions, we'll go ahead and wrap things up. Have a great weekend, guys. Stay safe, stay nimble. Many, many, many levels here of these key thresholds that we talked about. I'm looking for some inflection, and I think we get some clarity as we move into next week. Marchin with a late request here. Swiss yen. Man, where are you coming up with these trades? Swiss yen. JPY. Ooh, big move yesterday. Big outside reversal yesterday. Interesting. Okay, so you can obviously see this has not been updated since the early 2000 to 2018 or so, but let's see what we're looking at here. Hmm. So what I'm trying to do is I'm trying to identify if there was a level that we just hit there. We have the 50% retracement at 118.17 for the entire drop, multi-year drop. But I want to see some slope there. If this is, so it looks like the onset of something. Um, and you are trading at multi-year range highs. It looks like the onset margin of an exhaustive trade, but I don't have the levels mapped out for you for where I'd be comfortable to try to fight that per se. I mean, you're just looking at just the basic swing high from 2017. I mean, that's basically what you're driving into. Not enough evidence, but margin, I'd be looking for the near-term fade. Now, the problem with that is, I mean, the good thing about that is that that's yen strength. Dollar yen has been testing a major critical resistance. We just talked about that earlier in the session, March, and you can see that you can watch the replay. But dollar yen, again, by my parts, at big resistance. So the yen strength story to me kind of makes sense. Swissy, on the other hand, has been a disaster. Here's what Swissy did. We loved the breakdown, guys. If you guys recall, we actually called that drop, and our last level was right in this zone. Once this broke and tested as resistance, I thought we were off to the races. We never quite made it to the 618. Everything reversed. So that's Swissy weakness. So it makes sense kind of for the Swiss yen to sort of pull back, right? And with that outside day reversal, looks pretty decent. This is monthly open support. Look for the break there, 117.63. And if the breakdown is legit or the reversal is legit, I'd want to see hold resistance near 118.40. I'll just leave the 50 on there too. But like a possible sort of play here is, again, this is just ideal scenario. We don't know if that's a real high yet or not, but this is kind of the gig I'd be working with. So this would actually be a retracement of the yearly range of the 2021 range. And that would put the 618 right there. Make sense? Marchin, does that help? He says, thank you and sorry for the late call. No worries. I'm glad you got in on time before we wrapped up the session. That's a very interesting trade for me. I'll tell you that much. Look for resistance ahead of 118.40. Again, ideal scenario, 118.27s. The 50, you get 50 to move and you call it back. But largely, this is the zone. And you can see, again, if I just get some consistency here, you can see, again, like that's kind of the max you'd want to see it come through. Key support, the ways down, 117.20. If you get that break, I think we validate the reversal there. But big outside day reversal. Thanks for bringing this up. Interesting. I don't think I've looked at this chart in years. So always count on you, Martin. Thank you, sir. All right, guys. So again, I'll wrap it up there. Have a great weekend. Stay safe. If you're in the Northeast, we're already getting dumped on outside here. Things freezing up. So Wish you guys the best weekend. I'll see you on Monday for the free session on Daily FX, and on Wednesday for that special series on IG. Same to you, Jay. Ted says in Florida. I'm jealous, man. Actually, you're in Florida. I'm jealous for a lot of reasons besides just the snow. But have a great weekend, guys, and I'll see you on Monday. Cheers.